Welcome to This Explainer. Okay, today we're diving straight into the record-breaking second quarter 2026 earnings report from Ameriprise Financial. If you've been following the financial sector, you know this was a highly anticipated release. We're going to take these complex financials and translate them into a really clear picture of exactly how the company pulled off this double-digit growth, relying purely on the actual data from their presentation. Before we get into the hard numbers, let's take a quick look at what's driving this from the very top. Chairman and CEO Jim Cracchiolo points to a few absolute game changers for the quarter: their diversified business model, incredibly disciplined execution, and their strategic push into AI technology. He specifically calls out the record level of firm-wide assets and highlights the fee-based wealth and asset management businesses as the main growth engines. It really sets a confident tone for the numbers we're about to unpack. Here is our roadmap for today. We'll start with the big picture, look at the wealth management growth engine, break down asset management and retirement, and finally see how they're delivering for shareholders. All right, part one, the big picture, Q2 2026 results. $1.8 trillion. That is the headline figure from this report, and it's a massive milestone. Total assets under management, administration, and advisement shot up by an impressive 14% year over year. Achieving a record high number like that requires a serious combination of both strong market appreciation and really consistent organic client inflows. Now, you might be wondering how all those assets actually translate into earnings. Well, check out the adjusted operating EPS. It sits at $11.07. While GAAP EPS is technically higher at $11.98, management really points to that adjusted figure, which is a huge 22% jump, by the way, as the true reflection of their underlying operational growth. It strips out the noise from market impacts on derivatives and other non-traditional valuation swings, giving us a much cleaner look at how the actual business is performing. And that top-line success, it wasn't just about hoarding assets. We're talking adjusted operating net revenues growing 13% to reach $4.9 billion for the quarter, all backed by a rock-solid 27% pre-tax margin. Plus, they aren't just coasting. Ameriprise is actively rolling out advanced AI capabilities directly into advisor workflows to turbocharge future efficiency. This blend of financial and technological performance actually earned them recent recognition from both Fortune and Time as one of America's most innovative and best companies of 2026. Moving right along to Section 2, Wealth Management Growth Engine. This division is an absolute powerhouse. We're looking at a 16% surge in pre-tax adjusted operating earnings, climbing from $812 million in Q2 of last year up to $939 million this quarter. The company credits this to strong market appreciation mixed with really robust fee-based revenues. And notice how that margin is holding incredibly steady at 28.9%. That shows us they are managing their expenses perfectly in lockstep with this massive revenue growth. But here's the metric that really caught my eye. The adjusted operating net revenue per advisor hit a new trailing 12-month high of $1.2 million. That's a 12% increase. When your individual advisors are becoming that much more productive, it creates this incredible compounding effect across a network of thousands of advisors. So where is all that advisor productivity actually coming from? Well, total client assets surged 15% to $1.2 trillion. And crucially, wrap assets, which we know are the absolute lifeblood for steady fee-based revenue, saw a massive 19% jump to $732 billion. It's a beautifully clean, logical flow straight from asset gathering right into top-tier revenue generation. To keep fuel in this growth engine, Ameriprise has been aggressive. They recruited 79 experienced advisors just in Q2 and held on to a very healthy $28.8 billion in cash sweep balances. But the real headline grabber? A new strategic partnership with Huntington Bank. This deal is expected to move an estimated $28 billion in assets onto the Ameriprise platform. Management made it clear that this massive influx will more than offset the impact from recent Comerica terminations, totally setting them up for continued momentum.
Okay, Section 3, Asset Management and Retirement.
Asset management essentially played the role of the efficiency expert this quarter. They drove total revenues up 14% to $947 million, but more impressively, they squeezed out a striking 23% increase in pre-tax adjusted operating earnings, bringing it to $274 million. They pulled off this outsized earnings growth through asset expansion, combined with the positive impacts of some recent business transformation actions. The real takeaway here is the brilliant balancing act between these two supporting divisions. You've got asset management running as this high-octane growth unit with a phenomenal 43% net pre-tax adjusted operating margin. And balancing that out, the retirement and protection segment serves as this steady, incredibly reliable anchor. It operates at a lower but still very healthy 21% margin, and its main job is churning out incredibly consistent earnings and free cash flow for the broader company. Now, at first glance, the retirement segment's operating earnings dipped slightly by 6%, down to $202 million. But you have to look under the hood. Actual sales in this unit exploded by 20%, hitting $1.6 billion. This was totally fueled by intense client demand for structured variable annuities and products without living benefit riders. So even with a slight earnings dip right now, the long-term sales pipeline remains incredibly strong.
Finally, Section 4, Delivering for Shareholders.
This is where it all comes together for the investors. First half capital returns shot up by 25%, reaching nearly $1.9 billion. Because Ameriprise requires relatively little capital to fund its organic growth, they can just pump cash right back to the shareholders. This dynamic is exactly what's propping up their incredible, industry-leading 55% return on equity. Just looking at Q2 alone, management opportunistically scooped up 1.7 million shares at an average price of $459. Between those buybacks and dividends, they returned $932 million in a single quarter. That is literally 91% of their operating earnings going straight back into shareholders' pockets. And the crazy part? They aren't even stretching themselves thin to do it. They're still sitting on $2.1 billion in excess capital and $2.8 billion in available holding company liquidity. A great quarter is fantastic, but we all know the market pays for consistency. And this strategy, it is incredibly durable. Over a one-year trailing period, they hit a 17% earnings per share compound annual growth rate. Zoom out to a 5-year view, and it's exactly the same story, a 17% EPS CAGR over half a decade, while returning a staggering $14.3 billion to shareholders during that exact same timeframe. So looking at this highly orchestrated machine, from the massive asset gathering to the insanely efficient capital returns, what's next? The real question for us to ponder is this. With the rollout of those new AI advisor tools and that massive $28 billion Huntington Bank integration coming down the pipeline, can Ameriprise actually sustain this record-breaking momentum through the rest of 2026? It's going to be absolutely fascinating to watch. Thanks for joining me for this explainer, and we'll see you next time.